Good morning, everyone, and welcome to the Daily Trader with Kevin Hincks. I've got two paper money trades that we're looking at today. First one, Tesla. Second one, Nvidia. So we're going to start the trading week with two very high-profile names in the news for different reasons, as we always cover on this show. First and foremost, let's go to Tesla. Tesla, a stock with unprecedented move, not only since the election, but even since the 1st of December, the stock is moving. So look at the chart there on the board. You see it is almost parabolic how this chart is moving. The numbers, if you look for the last 1 week, up 12.5%, 1 month up 40.7%, 3 months up 98% in 3 months. This is Tesla. This is not some IPO moving. This is Tesla moving. So incredible numbers. Now, last week we did a trade, and it was a long iron condor. Well, you have to be prepared, like that trade was, for movement, right? And the potential for movement in these names. Just look at Tesla today on the news. Wedbush's Dan Ives comes out, raises his price target from $400 to $515, says the autonomous future is coming sooner. Trump to fast-track initiatives that launch full self-driving is coming easier. Elon Musk's net worth now over $400 billion. This is the most incredible story, and trading it, you have to understand the potential for movement in either direction, frankly, because these moves, last week we did a trade where the call vertical was 430, 435. Well, it's $17 through that strike already. So this week, that doesn't change. Nothing has changed with that scenario. Now, if Tesla were to slow down and sit here and not move, the long iron condor that we're looking at, again, just adjusting strikes, putting on a new position here for this week, and that is going out to the January 3rd expiration. Now, if you look on the calendar, January 3rd, 18 days you have this. The expected move in 18 days, $60 in either direction. 60. That's in 18 days. So you have to assume implied volatility is high. It's got a one-day expected move that's now $18. It was over 20 to start the day. So Tesla, incredibly volatile, incredibly high implied volatility, but it's the movement that either will happen or won't happen. And so the long iron condor, this time, like I said, I went out to January 3rd. I bought the call vertical, 470, 475 call vertical, right? Then I went in and bought the 410, 405 put vertical, only a $5 iron condor this time on the long side. Why? Because this is a little less risk. It's not as big of a number, so the debit is not as big if Tesla were to slow down. You see the debit there, about $2.90. Now think about that. You're spending $2.90 with the potential to make $210. That's the environment that you're in right now in Tesla. Can Tesla go to 475? It might. But could it also go to $405 or $400? Yes, it could there too. And do I know? I have no idea where Tesla's going. So you've got to be prepared for the news cycles that are all over the board. Tesla's extremely overbought on the RSI, now hitting over 80 on the RSI. So caution here in terms of Tesla. So buying the 470, 475 call vertical, buying the 410, 405 put vertical, the long iron condor, spending about $2.90. That's where it's trading right now, right at about $2.90, which gives you the potential, the opportunity to be profitable in either direction. The risk is the debit paid, and if there's lack of movement, if it stays between 470 and 410 is where this trade would lose money. So the expected move, we're well inside that. If you wanted to move the strikes out, the debit would go down, but the probabilities would also go lower. So that's what you have to be careful with here. As you adjust those strikes, I kept my strikes inside the expected move. That will cost you more money. That's the trade-off. All right, let's get to our second trade of the day here, and that is Nvidia. Now, Nvidia, strangely enough, has not had that good of a run lately. It is, if you look at the last week, down 2.3%. Last month, down 7%. This stock is starting to struggle up at these levels. Is it justified? I don't know. The numbers that they put up in their last earnings event were incredible. The stock hit a high of $152. Now it's below $132. And Nvidia has shown times on its chart and through its history where it does consolidate or trade lower for a while. But the numbers, the revenue growth, $35.1 billion in revenue in their last quarter based on data center and gaming. Remember, the Hopper chip, the Blackwell chip is starting to roll out. It's sold out for 12 months. They've got the Rubin chip waiting in the in the future. It's got an almost monopoly effect in AI hardware. It's got a comprehensive software suite that also helps it, but stocks do this. Stocks consolidate and stocks sell off and people reduce positions. And this is what may be happening here at these levels. Is that a buying opportunity? Don't know. But the trade we're going to put on is one where buying going out to January 10th. So that is 25 days, giving yourself some duration, buying the 132 call, selling this week's December 20th, 137 call. The expected move for this week, about $5.80, almost $6. So buying 132, selling the 137 call diagonal. The risk on this trade, the debit paid. I put $5.50 in there. It's currently trading about $5.50, right on the nose there for where this is trading. This collects theta. This is risk defined to the debit paid. And you're looking at about 29 or 30 long deltas in Nvidia. And this is one that gives you deltas without buying the stock. The risk is much less than buying the stock and selling the a covered call. The risk is the debit paid. Whatever debit you pay on this spread, that is the risk. So 2 trades today, both risk defined, a long iron condor and Tesla playing for movement in either direction, and long deltas via the call diagonal in Nvidia, as it is now, $20 off its highs. That's today's Daily Trader. I'm Kevin Hincks. Have a great day. See you tomorrow with another edition of Daily Trader.